Before we get started, down in the description below is the link to this slideshow. So if you would like to follow along or download this slideshow, it is there for you. You all seem to really enjoy the raw, no edit style of video that I did last week. So I'm following up with a daily templates video. So that way you can get into better alignment with your weekly thesis and find the best trading opportunities possible. Hope you all enjoy the video. All right, so we're going to be talking about the daily templates today. So last week when I did one of these classes, it was, again, very informal, but we talked about the weekly templates and about how the whole market moves consistently in threes, right? They're going to go from peak formation to peak formation, make 3 levels of rise or fall, and then create a new peak formation. Sometimes it is going to look like 2 levels, and you're like, well, that's whatever. The whole purpose of this is to keep you patient and to help you find the better setups when they present. You're looking at first red and first green day. Do I really want to be taking a first green day that occurred here? Probably not, right? I want to try and find a first green day that is presented down in level 3. Same thing for like first red day within the week, where you have selling opportunities, you have buying opportunities. And then this over here, I would be looking for stop, hunt low, and then rise. So like if I got this was my first green day, I might be looking for this over here as a long trade. And then you could take trend trades over here, level 2 consolidation. But also there's going to be opportunities where you might have a high of day trade like this, where they trade back up to the high of the day and then stop hunt back down to the low, 25, 50 pips. You're going against the overall trend, but those opportunities usually will present in level 2 consolidation. You can get the counter trend opportunity, or you can get the low of day buy to continue that trend up into level 3. Like those are all the setups that we are using in this community and things like that. That is all based off of this style of template. And then all that other stuff is just extra, right? Looking for the 100 pip box, looking for market structure and all those other things. Those are just additives, things to help you, tools in the toolbox to help you make better decisions. But that is all for weekly template. And you've heard me say things like, I'm going to frame my day. I'm going to do this. I'm going to do that on the day to try and help me find the best templates possible. Because like today on the pound, where we had a really obvious and beautiful W down low, and then that was a first green day, right? And they ran it up into the close, and then the day began, and then it's been breaking down all day long. And you might be thinking, okay, well, I'm going to look for a buy low opportunity because yesterday was first green day. But then on the day itself, they come down and they have to do their 3 levels of drop. Maybe this will turn into an afternoon trade. Maybe it'll turn into a trade tomorrow, or maybe just overall, this could have been a first green day trap and they're going to do 3 more levels down, right? But looking at the day itself is really important for me to help validate whether or not my signal day from the previous day is actually going to play out. So we're going to talk about that. We're going to look at all the different kinds of templates that you can find on the day. And you have to remember that these templates, think about it like this. Like when you're thinking about the big overall picture, these daily templates that we're going to talk about, stop hunt low, peak formation, 3 levels of rise. Stop hunt high, 3 levels of drop. Come in sideways, spike the high, spike the low. Like those all look like weekly templates, right? The templates for the day are exactly the same, just on a smaller scale, which makes things kind of simple. So let's go take a look. I've got some things on here, some things about timing and whatnot. Asian session timing window is from 8 to 11 p.m. Eastern time. That is New York time. But for measuring purposes, Steve Morrow talks about 8:30 to 3. I've started back testing and using that 8:30 to 3 time, and I found it to be far more accurate than just using the 12 candle window. So using 8:30 to 3 a.m. has been working really well for me, and it'll help you to better identify what kind of daily template you're looking at. So similar to the weekly templates, there are daily templates as well. I'm looking for the best daily template and the one that will align with my larger thesis. When you talk about like 3 session setups and things like that, you can use daily templates for that, 110%. That could give you some kind of stop hunt trade, 50, maybe even more, but it might not be in alignment with the larger weekly thesis. So you need to be aware of what the larger weekly thesis is. That way you come into the trade with the understanding, hey, I am taking a stop hunt style of trade. I can lower my expectations. I can lower my risk. And then if I get into alignment with the larger weekly template, now I can actually look for a better high quality, 3-star, 5-star style of setup that I'm actually going to hold to go the distance, 50, 75, 100, maybe more. It's going to help you to time your entries and identify the more high probability setups like we just said. And these are the different kinds of templates. Somebody in the live stream this morning while we were trading asked me, like, what are the different kinds of templates? Here you go. Peak formation low, 3 levels of rise, peak formation high, then I'm looking for an entry. Peak formation high, 3 levels of, so basically the opposite of the first one, right? Peak formation high, then the peak formation low. This could be like a 3-session setup, right? Where maybe Asia's put in a high, come down, London's put in a low, pulled off the low, and then entry for 3 levels of rise or fall. So maybe they trade back down into the low. Doesn't this kind of look like a short squeeze setup? And then you get your breakout and they come out and they do 3 levels of rise, something like this. All right. And then they end the day in consolidation, which you're going to see. You can also have peak formation high, level 1 entry, 2 to 3 more levels of fall. So if you have, for example, here's the Asian range and they've stop hunted to the high, peak formation high, you can expect 3 levels of drop. This would be like if I'm looking for a high of day trade. If I have a market that has created a range and stop hunted to the low of the Asian range, I've got a low of day trade. So maybe in level 1 consolidation or even level 2 consolidation for the week, looking for trend trades. And then you can expect 3 more levels of rise or fall. So if I'm getting in at the bottom or in level 1, then I can expect another couple moves up. But regardless, this is the safe bet on trading entries. All right, so those are the different templates. We'll come down here. So if I have a peak formation low, this is one of the templates. Peak formation low, 3 levels of rise or fall, peak formation for an entry. So that could be on the day itself. Maybe it was a buy low day. And you have your stop hunt to the low of the Asian range, or maybe just, put in that peak formation at the low of the day, and you've clearly identified 3 levels of rise. And I'm talking about the price. You can look at the candles and see those stair-stepping motions up towards the high. Maybe we're in level 2 or level 3 of consolidation, and then we have 3 levels of rise on the day. And then we use the timing window to identify, hey, okay, New York has just opened up in that second or third level, and they've gone back to the high, and they've put in a peak formation high in our timing window. So maybe for New York, I can get early entries, or I can wait for it to break down and then maybe get follow-on entries after that first level. They pull back, and then I can continue my way down, which will lines, if you notice, that aligns very closely or almost identical to my entry criteria. So that is one style of template. This is a candlestick version. And as I'm going through these examples, you're going to notice that these are all, I've got the times and the dates and things like that down here. They're all within the past couple weeks. I didn't go back super duper far and try and cherry pick examples. I just went back, previous week or a couple weeks and found all of these templates because they show up every single week and every single day. So for example, we have a 3 levels of rise where they've done peak formations down low, came out of the Asian range. So this is that 8:30 to 3 o'clock time frame. And they've came out of that box and they've gone back into consolidation. Level 1, spike the high. Level 2, spike the high again. Level 3. Now remember, level 3 does not matter. It genuinely does not matter. It's just a guide. It is just a reference point until they put in a new peak formation. So they put in a new peak formation, and now I can look to take entries, or I can look for the breakout pullback and I can take entries, or maybe even, if I'm getting in a bit lower, that's fine as well. Some entries. So this is a high of day trade where they've stop hunted to the high of the day in 3 levels, in 3 pushes. And you can see this little anchor point down here where it's a pump and a dump, right? So they pumped it up, peak formation high, and then dumped it back down. From peak formation to peak formation. All right. Are you all following along with this pretty well? This is making sense as far as this first template goes? I'm going too fast. Let me know. I'm here for you all. All right, we're getting crickets in the chat. I'm going to keep going. All right, so this is a secondary example of what we just looked at. This was from March 18th, and this is the Asian range. That's that 8:30 to 3 o'clock. And again, they have came out of consolidation, and they went into consolidation. So they broke out, went back into consolidation, and they continued to rise. And then they continued to go into consolidation, and then once again, they went back up for that third level of rise. So maybe we're in, once again, level 2, maybe level 3 of consolidation. I'm trying to figure out what kind of daily template I am looking for to identify a reversal. If I was in level 2 and there's a peak formation down low, maybe I'm looking for that long trade. But once we have 3 levels of rise on the day itself, maybe now I can trade the stop hunt back down. So this is 8:30. This is when the New York session is opened, and you can see that they have put in a micro head and shoulders, a bit of a descending triangle here, and then broke down. That's a peak formation at the high of the day. And then they've came down, level 1 of drop, and 2, and then 3, and then basically ending the day in consolidation. All right. So if it drops down 1 level, do I just automatically start looking for the long because it's going down? No, because we've already executed 3 levels up. This is one of the templates, and now maybe we're looking for 3 levels to go back down, basically front side, and then now backside. Oh, next example, or the next kind of template or style of template where maybe we have stop hunt low, Asian range, peak formation at the low of the day. This looks very similar to this other template, but what happens if I want to get in line with the overall template for the week, right? So maybe this is level 2 or level 1 consolidation. I'm looking for stop hunt low and then rise. So if I get that Asian range and I get a peak formation at the low of the day, usually or a lot of times that's going to come in Asia, London, but it will come in New York as well, where I can get in on that W at the low of the day. Or if I've missed the W, at least getting in on that first level of rise, level 1 consolidation for the day. So that way I can execute the rest of that trade, right? You're going to see this a lot of times with like straightaways and whatnot. This is obviously Asia, London. No, it's not Asia, London. Excuse me. This is earlier in the day. So this is the larger W down low, and you can see this is all part of the Asian range. Whenever I have this hollow box drawn up here, this is the Asian range, so 830 to 3. The high and the low is highlighted from 830 to 3. They put in a very large multi-session W and broke out. And one of the things that you can do is, because this looks like 1, and then 2, and then 3. But if you look at it more often, that first level has come up in a 1, 2, 3 and pulled back, and then continued. So that's level 1. And then that would give me the opportunity. This is the session window kicking in. I'm in level 1 consolidation. I need to look for a dump and a pump. So there's the dump and the little W down there for the entry. And then now this can continue to move in this same variation. So the way that this is a running, or like a, what is it called? Like a running wedge. That running wedge sort of consolidation, level 1, and then it does the same thing for level 2. So stop trying to count the peaks. This is an expansion of a range at this point. Level 2, big run up, and then it goes back into consolidation. Notice the break right here of trend, and then it runs up one last time for level 3. There's our new peak formation at the high of the day, and then it can end the day basically in consolidation like this. That would be your end of day consolidation. All right, so to review this example, large W at the low of the day. Yes, Stuart, I'm going to be posting this on YouTube. Big W at the low of the day, level 1 of rise. If I'm trying to get in based off of a larger weekly template, I'm in level 1 of rise. That still gives me the opportunity. I've missed the trade from down low, but once the session begins, now I have the opportunity to get in coming out of level 1. Do not counter trend things coming out of level 1. That is that big DNC moment. All right, here it is again. And you can just, it's incredible how similar these templates are every single day. Actually, this is a multi-session W, but also you can see this little W down here as well. I don't know what date this is because I didn't put that thing up there, naughty, naughty. But 830 to 3, I've marked off the high and the low of 830 to 3, and you can see the stop hunt, the sort of market maker behavior. They've came down, put in that W. This is the stop hunt outside of the Asian range and pulled back up, frame the day. Opening range breakout that has failed. And then they have came up again in that running wedge sort of formation. Level 1, they broke trend, went into consolidation and continued. So that can complete my level 1 move. So if I'm trying to get in, don't just start counter trending things. But if I'm trying to get in based off of a larger weekly thesis and the session begins, this is about 8 o'clock right here. Look at the short squeeze, right? And then the little W down here. And then they engulf back up to the upside. Do not counter trend coming out of level 1 consolidation for that big run up to level 2. Then it pulls back and then goes up level 3. And now we can end the day in consolidation. Now, this is later in the day. Obviously, not everything is going to happen in our timing window, but this did occur in our timing window, which is what we're looking for. Can peak formation you mentioned at the top, is that new? What are you referring to, Gazo? Can the peak formation you mentioned at the top, to explain? All right, we'll come back to it later, Gazo, no worries. Nav, can this just be used as a solo strategy? I don't. So I'll tell you what I personally do. I do not personally use this as a strategy on its own. All right, I am still trading the exact same way that I've always been trading. This is what I've been using since I've been trading. This understanding of daily templates. I want to align it with the larger template. If I'm in level 2 consolidation, I'm allowed to take a counter trend trade. If I'm in level 1 consolidation and I've identified that for the week, I do not look to counter trend. Steve Morrow calls that an anchor point, right? So if you're coming off peak formation at the low of the week, he highly recommends not trying to take a stop hunt trade back down into the peak formation. This is the anchor point, because you never really know how far it's going to come down before it continues. But once you get up into level 2, then you have a better chance or a better opportunity to look for a counter trend trade, maybe coming off the high of the day or the low of the day, depending on the direction of the template. Now, a lot of these charts, these mostly are 5-minute charts. I think that for the day count, or for the, not the day count, but the level count on the day itself, I think 5-minute charts are a lot easier to see these patterns. So that could be a note for yourself. Sometimes the 15-minute chart's a bit more difficult to figure out what kind of template it's going to be for the day, because I think that time frame might be a little too long to see the patterns well. But here we go again. So this is kind of counter to this, flipped example, this is came out of the Asian range, and instead of going in consolidation and continuing and confirming level 1, they went up. This was a stop hunt to the high, put in a larger M at the high of the day and broke down. So now we have a peak formation at the high of the day, and they've pulled back down into the Asian range and gone back into consolidation. So we've got this, you can see the shifting sort of candle here. They shifted out of consolidation. It breaks down, one level down, goes sideways, level 2 down, goes sideways, level 3 down in the day in consolidation. And you can see that at the end of the day, this is a very common thing. Peak formation high, peak formation low, in the day, flat. So, for example, if I had I want to sell the high of the day sort of trade setup for the week, maybe this is a good template to look for. And maybe once it starts to break down, like, for example, this is all within the session, which is really good. But once it drops down a level and I'm looking for sell high, and I've noticed, hey, this is a peak formation at the high of the day, do you really think it's good to counter trend this just because it's broke down and gone into consolidation? Probably not, because level 1, do not counter trend. All right, good stuff. Level 2, maybe you can look for a counter trend on level coming out of level 2 at the low of the day. However, this is drop down level 1, drop down level 2. The better trade is just to look for a sell high opportunity to continue that trend down. Yes. Am I seeing peak formations at each level? Yes, you should, because they're going to come down. They're going to put in a new M. They're going to drop it down. They're going to put in a new M. They're going to drop it down. And then eventually you're going to get your W. Just the same like it would be with the week. Just like everything that I'm referring to here on the day, you can apply this to the week as well. But it really helps once you have a good weekly template to be able to identify these patterns, so that way you can find the best template on the day. Asian range, 8:30 to 3. It's a 5-minute chart, US 30. They dropped it down outside of the Asian range, breakout. Only 3 things markets do: breakout, trend, breakout, reverse, stay in a trading range. They broke out, it failed, pulled back up on the inside, and there's that larger W, down, up, down, engulfment of that W. Big run up, level 1, pulls back, big run up, level 2, big run up, level 3, peak formation at the high of the day, in the day in consolidation. Here's the times. All right, so this is towards the end of the day. I don't know what it did for the rest of the day. I think this was actually 2 days ago, or 3 days. This is the 18th. All right, NASDAQ, this is a 5-minute chart. Now, this is a peak high, peak low template. I really like seeing these, because you can expect some very aggressive and violent moves when you see this daily template. The entire day has consolidated in this example specifically, and I don't have the times up there, unfortunately. Sometimes, maybe you'll get a peak high and then a peak high, so like a 3-session setup, which has kind of happened here. You can see the peaks high and the peaks low to form the box. But the Asian range, 8:30 to 3, has built this box, and then coming into the New York session, they spiked the high first. This was news. And then they spiked the low, and then they pulled back up into the range. There's that channel right there to go vertical. Then they come up, level 1, level 2, level 3, and then in the day, again, in consolidation. Really good template to watch for. This is one of those ones that will just scare everyone, because like, oh gosh, which direction is it going to go? Well, it's one of the templates. So just wait for confirmation. Hey, they pulled back up into the range. They spiked the high, they spiked the low, they pulled back up inside. Use the timing window to your advantage. Where are people trapped? Look at this 1, 2, 3 to the low. People are probably trapped down here. Now, this is one where they have not spiked both sides of the entire Asian range. This is a breakout pullback style of template, but they have broke out, put in a peak formation high, then they've pulled back, put in a peak formation low. There was a higher high on the inside. Big run up, level 1, do not counter trend. There's that ascending triangle, do not counter trend. Level 1 breaks out, comes up, level 2 goes back into consolidation, goes up, level 3 in the day in consolidation. You can see these are the same patterns over and over and over again, just slight variations. My disconnect with the strategy that I've noticed just by using definition of peak formation. Okay, so what is the definition of a peak formation? That is objective, right? Peak formation is not just any swing high and swing low, number 1. Number 2, we are looking for them to be at specific areas. So notice how this is at the high of the day, and they put in a larger triple top or an M at the high of the day specifically. That is a peak formation. M, W's, and half Batmans. Those are peak formations. You can get them down low as well. That is an objective place to look for peak formation highs and lows. High of week, high of day, low of week. That's where we're looking for them. That's what you were trying to ask, Gazo? Good stuff. So how can this actually be useful to you? Let's say that you get a first green day, and then you get one of these templates. They spike the high, they spike the low. Timing window. We're at the low of the day. Maybe wait till the W gets put in. I don't know. It's going to greatly benefit you to be looking at it like this with clarity. Take all that crap off your charts. All right, take all the take the numbered box off, take the session windows off, take everything off, put a hollow box up there, 8:30 to 3, and look for these different types of templates and make them or get them into alignment with your overall thesis. And it should greatly help you to keep you patient and to also just truly let you know what you're looking for. And then once we get down here, we get down to the level, or we get up here, we get to a level. I'm going to be looking at behavior of price, looking at how things are behaving based off my entry criteria with my overall thesis already in alignment. And I'm just going to look for my best entry and time it around 9:30, 8 o'clock, something like that. How do you know when the high of the day or the high of day, lower day is locked? Are you referring to so when you get a peak formation down low like this? So this would be like a W. This is a lower W. Hey, so Fahim, talking about peak formations getting locked. When you have a W and you have first leg, M or W, 15-minute chart, 5-minute chart, and then you get that middle structure, just like you all saw me doing today on pound dollar, what I was looking to see if they were going to quote unquote lock it in, draw that line. All right, once you get that middle structure and they trade back down into that level, watch how they trade back down into it. Do they just come down in 3 pushes and then put in a W? Because think about it, this is a 15-minute bar or a 5-minute bar, but this is what the 1-minute chart could look like. If you're in second leg M or W, and this is kind of what it looks like, you get a break in structure back up to the upside on the 1-minute chart, and it does something like this. You are now entering in on the second leg of a W prior to the bar going back up like this. That's how you know it's locked, quote unquote locked. All right, that's best guess whether or not it's locked. You're trying to get in when the high of day or low of day is quote unquote locked in. Second leg, M or W, 3 pushes back to the level, back to the high or back to the low at a certain time of day. That answer your question, Fahim? Okay, let's see if we can pull up some actual charts here. Yeah, get this up there. Let's see if we can walk through some templates here, which you're probably going to see some of the ones that we just looked at. I'm going to show you all how to study this and how you can don't just take my word for it. Go back and find it for yourself, right? Because I could sit here and spew all kinds of whatever, and it's irrelevant. Let's find you all a good way to go back and study this. So number one, the first thing I would do is look at your weekly templates. Go back, watch the video that I just put out last week, the other one that has the blue thumbnail on it. Identify your weekly templates, Monday, Tuesday, Wednesday, Thursday, Friday. Find the signal days. Find the 3 levels of drop or rise within the week. Identify that. Then go down to a lower time frame. So I think I took a trade. Was it this one right here? No, it wasn't that one. Whatever. We'll just go over here. So we had peak formation at the low of the week that's came up level 1. No, this is the one I took. Level 1, level 2, and level 3 back up. This is a part of the weekly template. This is the daily or the weekly separators right here. So peak formation low, day 1, day 2, day 3, 3 levels of rise. Oh no, you can't see my screen. Probably should make sure it's like that on Zoom too, huh? Okay, so what I was saying, go to your weekly templates and look. This is the best way I think that you can study. Monday, Tuesday, Wednesday, Thursday, Friday. Doing this in hindsight will prepare you to see into the future. Very obvious, peak formation, low of week. They've came up level 1, consolidation. Level 2, consolidation. Level 3, first red day. Peak formation at the high of the week. Now, if I was trading this day and I looked at this and said, hey, I think I'm in level 3, I'm going to look for a sell high. What does that mean? I'm looking for a above closing price, at previous day's high, things like that. Now, none of that really means anything unless I get a good daily template that I can trade within my timing window. So let's go down to the 5-minute chart and try to identify which kind of template this was. We'll go and we'll look at 8:30 here, about like this, and then we'll come over, we'll look at 3 o'clock. All right, so there's 3 o'clock right there. So we can box this off. All right, so I'm looking for a sell high on this day. They've came up and they have triggered the previous day's high prior to the New York session beginning. And they've put in a M at the high of the day, peak formation, dropped it down and went back into consolidation and traded back up into the high. And right there is 8 o'clock. So let's say that 8 o'clock was this bar right here. I understand it's not, but let's say that it was. Do I want to start counter trending all of this after seeing all of those details? I'm in level 3. We have volume trapped and consolidated at the high of the week, the current week. There's a peak formation high at the high of the day, and they've dropped it down. Probably don't want a counter trend coming out of level 1. They pump it back up. They put in a new peak formation high. That was the entry right there prior to the session even beginning. Drops it down one more time and pumped it back up. Now in our session, there's 9:30 right there. They pumped it back up. You can see burst 1, burst 2, and a pause, and a burst 3. That was the middle structure on a 5-minute chart for the entry. Engulfment, pin hammer, level 1, level 2, level 3 in the day in consolidation. So if you're going to go back and study these, I would do examples just like I just did. Identify larger weekly template, mark off those details, go down to the day and look at what did the day look like prior to my session beginning, mark off those details, and then go down to your entry time frame and look and see All right, peak formation up high. They've dumped it down. We're in level 2. Where should I have got in based off of all of the larger details? Well, that's an M right there. That's 3 bursts back to the high in an M in a down moving market. That is a pump. Okay, I'm going to get in after the M, after a breakout, fake out candle, all those different things. And this is without even incorporating the 100 pip box or anything like that, right? So this is without trying to confuse you all with the 100 pip box. If you want good levels to get in from, you can use the 100 pip box as a guide. Oh, look, there's double zeros. Okay, so I'm going to get in at double zeros and then look for 25 to 50 pips more of drop from my entry. All right, let's go see if we can find another example. All right, this weekly template. They put in a peak formation high at the high of, well, that's not quite the high of last week, but they've dropped it down. 1 day of drop, and then they've dropped it down twice, 2 days of drop, and then now we have the 3rd day of drop, and it's also a Wednesday. Now, this was the Fed, so that's a no-go. But this is coming off of a large peak formation at the low of the week. Where are they going? They're probably going to go back towards either the breakout level or maybe even the high of last week, which I think was over here. All right, so they broke down, and then this is the peak formation low, right? So this is the W. And there's that running wedge sort of day 2, where this is day 1, 3-day cycle. The larger weekly template. This is kind of like we saw today on US 30. But just looking at this 1-hour chart, the first time that they ever went down into consolidation was about right here. And then you can see level 2 consolidation and then level 3 to end the day. Go down to a lower time frame. Let's look at the daily template. What did it look like? All right, so let's mark off. I'll get rid of all that so we don't get confused. 8:30. I can get the box on there. 8:30 goes to 3. Was there a peak formation within this box that I can use as a reference? Not a very good one. If I had to guess, this is probably a larger W, but coming out of consolidation in a big burst, gone into consolidation. Now we can see that on the 1-hour chart, right? This was that first time that they went into consolidation. Peak formation low, peak formation high, and then continued. Comes up, level 2, back into consolidation, running wedge, ascending triangle. And then notice how they come out into level 3. 1, 2, 3 to the high in the day, again back into consolidation. So this is like an ADR times 3 kind of day. Yes, that you say this is better weekly template plus this. I kind of probably did a bad job explaining this in my previous videos, but this is how it should have been viewed the entire time. I know that sometimes when you watching YouTube videos, it gets kind of choppy because it's not really in the best order. But if I had to put things in order, like a daily process, frame the day. This is what I'm referring to whenever you hear me say frame the day. Weekly template, daily template, and then take the trade or don't take the trade, right? I'm looking at all 3 of these things. I'm not just taking a trade solely based off the weekly template because that template might pull back the next day and get me trapped. But if the daily template also aligns with my larger weekly thesis, then good stuff. Let's see if I can find another one. Get out of this. All right, so like even today, look at this. This is NASDAQ, and I was sitting here trying to go short on this today, which I think is kind of ridiculous now looking at it in hindsight. Because this exact template just happened, whatever I just looked at right here. Large W, day 2 of the 3-day cycle is a runner. This is one of the kinds of day 2s that you can get. Day 2 is a runner. Not necessarily the cycle, but coming out of this larger W pattern, level 3, and now this could turn into a large range expansion style of week. This is day 2. This could be the runner day. Well, let's go back and take a look at what happened over here. Day 2 was a runner, and then on Friday, went back into consolidation in what appears to be either level 2, level 3, high of day trade. So again, that's why I was saying in the live stream today, maybe it's better just to wait for tomorrow for a better opportunity. We get this runner day kind of out of the way. They just keep on sucking in the shorts all day long, which you can see has happened. And then maybe tomorrow we'll get a better opportunity. All right, let's take a look at this one. Peak formation at the high of the week. Level 1 down, very clear. Level 2 down, very clear. Level 3 down. Should I be shorting at the low of the week? Probably not, especially not after 3 levels of drop, especially not when they're this clear. Down, up, down, and then there's the engulfment right there. I think that's the beginning of the Asian session. So let's go take a look at this day. What did this daily template look like? Coming off consolidation, peak formations down at the low of the week, and it's breaking out. We could take a look at I can see the W right there. There's 8:30. We'll drag it on over to 3. There's 3. All right, so this is a bit of a more blown out sort of Asian range, but there's the W, and it's ran up. So breakout, Asian range breakout. This was all level 1. Level 2, 1, 2, up into 3, peak formation at the high, and then end the day in consolidation. So I feel like this is going to help you better identify trades as far as weekly templates and then looking at this as confirmation. This is what I'm referring to. Anytime you see me in my videos saying, hey, frame the day, frame the day, frame the day. Opening range, initial balance, but this is a simpler way of viewing it. I've been trying to find a better way to explain this. I was using the opening range initial balance, but I think people still weren't quite getting that. So now this is a lot easier to explain. It's all the same stuff. It's just I think these templates are much better to view. Hey, goal, that's the thing. Develop a thesis. Develop an idea based off the week and off the day. And if the 3 levels aren't clear or the levels in general aren't clear, and you're like, I'm not really sure, and you're not really sure where to put the line, then just don't trade it. Level 1 consolidation, do not counter trend. Level 1, a lot of times coming out of level 1, the reason you don't counter trend is because that's the strongest move. Level 2 is usually the big burst, the one that just drags on forever and ever. Okay, so I've got peak formation low, peak formation high, and then a consolidation in the middle with a parabolic channel coming out of level 1. Oh, that feels pretty good. Yep, exactly. That's what I'm saying. So it's the same stuff over and over again. The weekly templates, it's the same stuff over and over again. The daily templates are the same thing over and over again. Peak formation high, 3 levels of drop. Peak formation low, 3 levels of rise. Spike the high, spike the low. Still expect 3 levels of rise or fall, but just look for the peak formations. W, low of day. Okay, they went higher, so this peak formation high is void. Level 1, level 2, level 3, in the day in consolidation. Large W, level 1, level 2, level 3. Stop going long in level 2, going to level 3. It gets dangerous. Here we go again. These are the kind of templates that I really like. I love it when I see them come out of the Asian range and immediately go into consolidation, come out, immediately go into consolidation, come out immediately. Because that stair step is beautiful. Very easy to identify. The stair step is perfect. Bit of a shorter little teaching moment here, but I do hope this has helped. I'm going to post this on YouTube so that everybody can review it over and over again. And anybody who's not here, because I think there's only 20 of you here, should give everybody a good reference to watch the first video on weekly templates. And then watch this one and just keep doing that over and over again. I'm going to put the slideshow in there. My cursor disappeared. It's right here. If you just reference those 2 videos back to back over and over again, and then go try to learn about the signal days, the signal days will make a lot more sense if you understand the weekly template. And then once you get the signal days, hey, oh, now I know about daily templates, what to look for, what to, you know, if I was going to take a first green day trade, but the market, this was first green day, just like pound dollar, and it just keeps doing this for the day. Man, maybe I should stay out of this. They just keep on breaking down. Maybe we're doing 3 levels of drop. Maybe the trade will come tomorrow. Could come in Asia. Could come not at all. Maybe it was a trap. All right, ladies and gentlemen, you have a great rest of your day. I'll be back tomorrow to trade live here on Discord.